When it comes to investors, you got two different types of people. You have the people who slowly build wealth over decades pretty consistently, and you have the people who potentially destroy a whole bank with one bad trade. And in today's video, we're going to go through and we're going to rank all of them. The legends, the geniuses, the villains, and the people who ended up in prison. Now, this is not just about who had the best returns, because that would be far too reasonable. This is about ranking the ones who had the craziest, most legendary runtime in investing history. The ones who built empires, the ones who built chaos, and the ones who built federal charges. And everyone on this list is an iconic investor, just for different reasons. So sit back, grab your popcorn, and let's get into ranking these investors. Now look, I'm going to just throw this at you guys. I think the number one comment on my last tier list video is that I have S tier in the red even though it's the best, and I have F tier in the green even though it's the worst. Look, you'd think you just take these dragging sliders and just drag it. You can't do it. I've tried, so you guys are just going to have to deal with it. So let's get into the video. Alright, starting off our tier list here, we have Mr. Peter Lynch. Now this is the guy that every single retail investor thinks they are until we actually look at our portfolio and we realize we are not him. Lynch ran the Magellan Fund at Fidelity, and he turned it into one of the greatest money printing machines ever created. Think 29% annualized returns for 13 years straight. He popularized the idea of investing in what you know, which a lot of people take that idea and they think, well, just because I watch Netflix, I'm going to invest in Netflix. But he was actually doing the research. He was visiting businesses. He was reading financial statements. He was interviewing management. He was understanding competitive advantages. And Lynch's real superpower was simplicity and insane work ethic. He could easily explain complex investing like he was talking to a 5-year-old, and yet he still made institutional investors look like they were trading blindfolded. His books, his philosophy, his results were all legendary. He also had no scandals, he had no blowups, he had no $20 billion margin calls, and he had no documentaries titled The Downfall of Peter Lynch. So for that reason, I'm going to put Peter Lynch right at the A tier of investors. He was a great teacher, and he's an iconic figure. Next on the list is a guy that you've probably seen popping up on the news because he's doing the same thing that he originally did that made him famous. Michael Burry is the patron saint of I did my own research, and he's the guy that every Reddit trader thinks they are until they lose 40% on a leveraged ETF. Burry became a legend because he did something that no one else simply had the guts, the patience, or the insomnia to do. He read every page of every mortgage document in America, and he realized that basically the entire financial system was held together with duct tape and denial. So what did he do? Well, he bet against it, and he bet against it alone, while his own investors called him an idiot. But the crazy thing was he was right, and he was catastrophically right. He predicted the housing market collapse. He made stupid amounts of money, he became a literal movie character played by Christian Bale in The Big Short, and he spent the rest of his life being allergic to staying in one position for more than 3 weeks. Michael Burry is terrifyingly smart, but he invests like he's speedrunning bankruptcy. One day he's long on farmland, then he's shorting Tesla, then he's deleting his entire Twitter feed, then he's posting a cryptic word like sell, then you'll see a tweet saying I was wrong, then he'll disappear for 6 months, and then he comes back with an entire portfolio flip. Burry is like if Sherlock Holmes and a fire drill had a baby. He's brilliant, but he's also erratic, he's unpredictable, he's not really trying to be a stock market beating machine, and he's basically just vibing with macro data. The thing with Burry is when he hits, it's historic, and when he misses, well, he'll log off Twitter and you probably won't see him for a few months. Michael Burry, in my opinion, is one of the most iconic modern day investors, so with that being said, I'm putting Michael Burry in the S tier. Next up to the table is Mr. Jim Simmons. Now, this is what happens when a math professor wakes up one morning and says, well, teaching is pretty cool, but what if I just print money instead? He founded Renaissance Technologies, one of the most successful hedge funds in human history. And when I say good returns, I don't just mean good returns. I mean returns so stupidly high and so secretive that it feels illegal to even talk about them. Jim Simmons did not care about charts, he didn't care about earnings, he didn't even care about CEOs giving inspirational speeches about synergy. He just used math. And when I say he used math, he used real math. The kind of math that makes normal people nauseous. His algorithms were so advanced that Renaissance basically turned the entire stock market into a vending machine where only they knew the cheat code. While everyone else was arguing about value versus growth stocks, Jim Simmons was somewhere in a lab asking a PhD in physics saying, hey, can you make me a formula that turns volatility into profit? And they did. His results? Well, Medallion Fund equaled 40% annualized returns after fees with decades of domination, and he was so consistent that Warren Buffett even looked like he was taking unnecessary risk. He's the only investor on earth who beat the market so hard and for so long that people literally assumed he was doing witchcraft. Jim Simmons did not just play the game. He rebuilt the game engine and gave no one else the patch notes, and he is truly the final boss of algorithmic investing. For that being said, Jim Simmons is an automatic S tier. Next up on the list is Bill Ackman. Bill Ackman is the closest thing investing has to a superhero supervillain hybrid. Some days he saves the market, some days he is the market crash. But either way, he's entertaining as hell. Ackman's whole brand is high conviction, which is investor speak for, I will die on this hill even if it bankrupts me. His track record follows. He turned Perishing Square into a multi-billion-dollar powerhouse. He made $2.6 billion in 2020 shorting the market during COVID, and that's $2.6 billion in 1 month. He lost billions of dollars on Valiant. He rage posted it all on live TV, and then he came back like nothing ever happened. Ackman invests with the same energy of someone who hasn't slept in 36 hours and decides to short the entire S&P 500. He's also one of the only investors whose emotional curve looks like a biotech chart. He's up 70% 1 year, down horrifically the next year, and then he's back to all-time highs. Then you're going to see him on CNBC giving a TED Talk level speech about why he's right. But here's the thing, Bill is actually really damn good at investing. He's made massive returns, built a monster fund, and proven that activist investing can actually work as long as you're willing to go nuclear on national television. And unlike some of the other hedge fund cowboys, Ackman is genuinely transparent, and sometimes he's a little too transparent, like tweeting mid-trade transparent. Bill Ackman is the definition of when I'm right, I'm really right, and when I'm wrong, well, your boy is down bad and we're eating top ramen tonight. So with that being said, Bill, for me, is a B tier. Next is the man that needs no introduction. A lot of people, myself included, call him the daddy of investing. Maybe I'm the only one who calls him that. But he's the reason that probably most of us got into investing in the first place, and that's Mr. Warren Buffett. Now, if you're not familiar with Warren Buffett, this man has put up 20% annualized returns over 50 years. Those kind of returns make hedge fund managers cry and make every finance bro suddenly believe in long-term investing. He is the sole reason why every 22-year-old who bought VU calls themselves a value investor. Buffett is by far the GOAT, and not just because of returns, but because he's consistent, he's rational, and somehow still humble enough to eat McDonald's breakfast every morning. And his legacy, it just speaks for itself. He turned Berkshire Hathaway from a dying textile company into a trillion-dollar empire. He lived like a middle-class dad the entire time. He gave away more money than the GDP of some small countries, and he told everyone to just buy index funds, while he was personally beating the stock market like it insulted him. Buffett made buy boring stuff and hold forever sound like the ultimate investing life hack. He showed the world that with discipline and common sense, you can pretty much outperform every genius investor swinging for 40% returns. Warren Buffett, he's right, he's always right, and you're never going to beat him. So for that reason, Warren Buffett is S tier. Next on the list is Mr. Martin Shkreli. Now, he is the only investor on this list who is actually more famous for being hated than for actually investing in the first place. He did not build a legendary fund. He didn't compound wealth for decades. He built a personality so unlikable, it became a federal stimulus package for prosecutors. Now, Martin started as a hedge fund guy, sure, but no one really remembers him for that. What everyone really remembers him for is basically jailing himself on livestream. He was beefing with Ghostface Killah. He was flexing a Wu-Tang Clan album like it was a one-of-one NFT. He was smirking in front of Congress like he just got grounded and didn't care. And on top of all of those things, he went on to raise the price of a life-saving drug by about 5,000%. Martin is the only person who entered the investing world, looked around, and said, you know what this needs? This needs a true villain. And sure, he's not stupid. He clearly understands biotech and finance, incentives, and really how to stir up a crowd. But his investing style was basically, let me start some drama, let me go and short something, then I'm going to insult someone, now I'm going to overprice a drug that some people need, then I'm going to go to prison, now I'll come out of prison and immediately start another financial product, I'll get banned from finance, then I'm going to do finance anyway. It's like speedrunning SEC violations for content. And his legacy? Well, he was probably the most hated man in America for a solid minute there. He was a huge contributor to the why regulation exists argument. He was a walking lesson in just because you can doesn't mean you should, and he's a meme factory. But let's be real. He's not on this list for investing performance. He's definitely not here for brilliance. He's here because he was so chaotic and so morally allergic to good PR that he became unavoidable. He chose the villain route and committed to his role. So with that being said, Mr. Shkreli, F tier. Next is Mr. Carl, and I don't know how to say his last name, so I'm going to call him Mr. Carl. He is the final evolution of the phrase, I'm not here to play nice. And if activist investing had a father, it would be this man. And he'd probably replace the CEO at the family reunion just for fun. He made his name by being a corporate raider, which is basically a really polite way of saying, I buy a big stake in your company, and then I make your entire board panic. His strategy was very simple, and it was very savage. He would find a company that's slow, bloated, or just mismanaged. He would buy a massive chunk of that company. He would call everyone incompetent. He would force changes, and then he would make billions, leaving scorched earth and higher shareholder value behind. Carl is the one uncle at Thanksgiving who always starts drama, except he also makes the family fortune go up by about 30%. His highlights include taking down TWA in the most Carl way possible, going to war with Apple, eBay, Dell, Netflix, you name it, turning activism into a full-blown money machine. The man has elite returns, a legendary career, and a track record of shaking corporations like snow globes. But he's also brutally confrontational, extremely public, the human equivalent of a shareholder lawsuit, and way more chaotic than the modern polite activist. And in my opinion, he is pure capitalist aggression. Now, while he's not quite S tier on this list for me, I do think he has chaos with a purpose, and for that reason, he is going to be in the A tier for me. Next up is Bill Hwang. Now, he is the absolute poster child for what happens when you mix genius, you mix leverage, and you mix zero adult supervision. This man did not just blow up. He created the single fastest wealth evaporation in modern financial history. Think about this. $20 billion gone in 48 hours. Most people spend generations trying to make $1 million. He blew $20 billion in 48 hours. He spent one weekend proving that he could lose it faster than crypto Twitter wipes out a bull market. So let's break it down. He ran Archegos Capital, which is technically a family office, but functionally it was a leverage factory hidden inside a prayer. His playbook was insane. First, he would take massive positions in a handful of media and tech stocks. Next, he would hide the true size using total return swaps. Then he would leverage those swaps to the absolute moon. Then he would borrow from every bank that answered the phone. Next, he would hope nothing ever goes down, and then pretty much everything went down. And when Viacom CBS dipped 10%, his capital company didn't get a margin call. It got a margin obituary. Within hours, prime brokers panicked, fire sales triggered, Bill went from $30 billion net worth to zero, multiple banks got obliterated, and regulators woke up in a cold sweat asking, how did we miss this? Bill Hwang is the only investor in history whose downfall was so violent, so sudden, so economically disrespectful that it literally killed a global bank. But here's the wild part. He wasn't dumb. He wasn't clueless. He actually had a pretty decent track record. He was just violently overconfident and apparently allergic to the concept of risk management. So his legacy was pretty simple. The fastest multi-billion-dollar blow-up ever, a masterclass in how hidden leverage can turn one guy into a systematic risk, and proof that high conviction and high delusion pretty much look identical until the margin call. He didn't just lose money, he performed an Olympic-level portfolio detonation. So with that being said, while yes, if this tier list was about chaos, he'd be automatic S tier. When it comes to investors, putting him in the C tier category. Next is Miss Cathie Wood. She is the queen of innovation investing, aka buying the future 20 years early and then wondering why the present isn't giving you solid returns. At her peak, she was the hero of every tech-obsessed investor who thought profits were a conspiracy and that disruptive innovation was a personality trait. ARK Invest was not just a fund, it was a movement. 2020 Cathie Wood was basically Thanos with ETFs. ARK was up triple digits, Tesla went to the moon, every Zoom, robot DNA company became the chosen one, CNBC couldn't get enough of her. She went from who is Cathie Wood to this woman is the new Warren Buffett in literally 6 months. And then 2021 and 2022 happened. Turns out paying 40x sales for companies with negative cash flow isn't a vision. It's a complete risk factor. ARK didn't just correct, it speedran a decade of losses in about 14 months. And the thing is, Cathie never flinched, she never paused, and she never said maybe valuations matter. She doubled down, she stood on business, then she tripled down. She said Tesla was going to $3,000. She said growth stocks would rise from the ashes like AI-powered phoenixes. Cathie Wood has elite conviction, the kind of conviction that makes Bill Ackman look emotionally stable. And whether she was right or she was wrong, she was damn consistent. She was extremely optimistic, extremely early, and occasionally extremely cooked. She became a real investing icon, and she proved that being early looks like being wrong until you're suddenly a genius again. So Cathie Wood, in my opinion, isn't a fraud. She's not clueless. She's just very high beta personified. Massive upside with also massive downside, but always something interesting going on. So with that being said, Cathie Wood, for me, is a B tier. Next on the list is Charlie Munger. He embodies the phrase, shut up and think. Now, if you don't know who this is, he's basically Warren Buffett's right-hand man, which basically makes him the co-architect of one of the greatest compounding machines in history. But Munger wasn't just Buffett's sidekick. He was the intellectual bouncer at the door of bad ideas. While Buffett was out here reading 500 pages a day, Munger was the guy leaning back in his chair saying, yeah, but have you considered not being stupid? Munger's entire philosophy can be summed up in 3 pillars. The first pillar was be rational. The second pillar was avoid stupidity. And the third pillar was shut up about things you don't understand and definitely don't invest in those things. And somehow turned into billions. His one-liners were so brutally honest that they felt like life-changing insults. Here were some of his one-liners. The first rule of compounding is to never interrupt it unnecessarily. If you keep learning every day, you will outperform most people who don't. Show me the incentive and I'll show you the outcome. Most people underestimate how much stupidity they deal with. Charlie Munger was the only investor who could drop psychological framework and deadpan humor in the same sentence, and still make you feel like you need to read 14 books just to understand the joke. His impact, in my opinion, was underrated. He pushed Buffett toward buying great companies instead of just buying cheap ones. He gave the world mental models before the self-help bros on TikTok ruined them. He lived to 99 on Diet Coca-Cola, seized candy, and pure discipline. He wasn't flashy, he wasn't chaotic, he didn't try to blow up any banks or hedge funds, he just quietly became one of the smartest, most rational thinkers to ever touch the markets. So with that being said, Charlie Munger is an A tier for me. Next is Mr. Jack Boglehead. Now, if you've ever seen the Boglehead subreddit, this right here is the man that they all worship. He is the only guy on this list who became a legendary investor by basically telling everyone to stop trying to be an investor. He founded Vanguard and created the index fund, which is basically the fancy way of saying you're not special, just own everything at once and go touch some grass. While everyone else was trying to outsmart the market, Bogle looked at the data and said, yeah, 90% of you are going to underperform. Here's a product so you can stop embarrassing yourselves. His philosophy was brutally simple. Keep costs low, don't trade, own as much of the market as you can, stay invested for decades, and ignore Wall Street drama. He is literally the reason why VOO and chill are even a thing. Every time someone smugly says, I just dollar cost average into index funds, that's not their idea. He was the man who started this. And this was his legacy. He made investing actually work for normal people. He saved investors hundreds of billions in fees. And he gave everyone a way to build wealth without pretending to be a stock-picking genius. And in my opinion, Jack Bogle is probably the role model for most average investors. Now, while he didn't beat the market by 30% a year or do anything too crazy, he made it so you, the normal people, the normal retail investor, doesn't have to try to beat the market. And in my opinion, that is S-tier impact. Ken Griffin is one of the few people in finance who can generate billion-dollar returns and Reddit conspiracies at the same time. He founded Citadel and built it into a global, unstoppable money printing machine. Then he built Citadel Securities, one of the most dominant market makers on earth. Then he went home and probably bought another skyscraper. Griffin is the guy who looked at Wall Street and said, yeah, I'll be taking all of that. He is extremely good, but he is also extremely disliked in certain corners of the internet. And you might ask yourself why. Because when you reach S-tier billionaire levels of success, people start assigning you superpowers. If the market dips, they might think Ken did it. If the stock won't fill, it was probably Ken. Your order routed weird, that was definitely Ken. Your girlfriend left you, probably Ken's fault. He basically became the boogeyman of the meme stock culture, especially during the GameStop saga. But controversy aside, Ken Griffin's resume is still ridiculous. Citadel printed $16 billion in 2022, which was the greatest hedge fund year ever. Multi-decade dominance, bulletproof risk management, runs one of the most important trading infrastructures in the world, personally richer than the GDP of some small nations, buys real estate like he's speedrunning Monopoly. And that dominance, in my opinion, puts him in the B tier. And the last guy to finish off the list here is Bernie Madoff. Now, Bernie Madoff is an investor. He is the final boss of financial fraud. The man did not beat the market. He just deleted the market from his portfolio and made up the numbers instead. For decades, people thought he was a literal genius. Consistent returns, no volatility, always positive. Like a perfect little line that even the S&P 500 looked at and said, bro, that's not how it works. His fund was basically, what returns should we give our clients today? Now let's just spin the wheel and 2% sounds good. He essentially pulled off the biggest Ponzi scheme in financial history. $65 billion in fake returns, fake account statements, fake trades, fake strategies, fake everything except for the lawsuits. And the craziest part, this went on for 20 years. 2 decades of silence, denial, and people saying, well, the line goes up, so it must be legit. Madoff didn't just fool investors. He fooled regulators, banks, institutions, wealth managers, and anyone with a pulse. He had the entire industry saying, how gullible are we, in real time. His investment strategy was literally, take new money, give it to old investors, never lose any of that money, and pray nobody asks any questions. Bernie Madoff is the reminder of what happens when people want returns so badly, they'll ignore every red flag in the universe. And his legacy literally destroyed countless lives, wiped out retirement funds, eviscerated charities, became the case study for every financial ethics course, and turned the word Madoff into a verb meaning got scammed horribly. There was no brilliance, there was no insight, just a masterclass in fraud wrapped in a pretty nice suit and a fake smile. And the only reason I believe he belongs on a tier list of investors is to remind everyone what happens when greed meets zero regulation. And for that reason, Bernie Madoff is an F tier. And there you have it, the ultimate investor tier list. Some of these people built empires and became billionaires. Some of them built very strong federal cases against themselves. But hey, that's the beauty of the investing world. For every Warren Buffett, there's a Bill Hwang out there speedrunning how fast they can blow $20 billion. And if you learned something today, that's great. If you didn't learn anything, that's great as well, because you can still buy VOO and call it a strategy. So drop a like if you enjoyed. Let me know where you would put some of these investors, and I'll catch you guys in the next video.